A very warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluko. Last episode, we had a guest with us in the person of Mr. MACDK, the technical advisor to the executive chairman of the Federal Revenue Service, and by God's special grace, the incumbent president of the Chartered Institute of Taxation of Nigeria, CITN. Before we rounded off that episode, we were looking at the different taxes in the country and the laws governing them. And Mr. DK made a distinction between direct taxes and indirect taxes. Among the direct taxes, to mention but a few, he spoke about personal income tax, about companies' income tax, about petroleum profit tax, and we did have to call it a day because of time constraints. Mr. DK, welcome once again to Tax Matters.
Thank you.
Chineke me, you don't increase my salary money. No be mistake. Oga accountant do so. Papa Junior, you never hear of Peter. Now the new MD be that. Talk now.
Peter, na Personal Income Tax Amendment Act, wey Mr. President just signed for law to better the life of him people, so them to go get more money to enjoy with them family. You see this amended act, they don't reduce the tax we do on top your salary money. They can't increase consolidated allowance money where we go to get every month. And you know, say, now the president will listen if you do better thing for the people.
Ah, Mr. President, you do well, oh. I'm blessing you, they think of me when you they sign this bitter. Now I feel do boku things this year. I feel rent shop for Mama Junior, buy textbook for Junior, send money go village, make the thing begin build my house.
So you say I'm the landlord?
Of course. Oh, you this is I call country for you. Peter, Peter, hey, Peter.
JTB, creating a tax-friendly environment.
Okay, companies' income tax.
A company income tax, of course, as simply said, taxes paid, income tax paid by companies operating in Nigeria. Of course, knowing that companies, of course, are generally, are registered. Sorry, not just generally, are nationally registered by Corporate Affairs Commission.
Yes.
And the companies are not expected to be insular or to operate from only one location. Since the tentacles are spread, between and beyond the boundaries of various states, then it's therefore said that it's a Federal Revenue Service as a federal tax authority that should collect taxes.
One is beginning to understand this matter. That's true. Companies are not restricted to one place.
The one place. And though, of course, there have been some case. I happen to be the secretary of Professor Dr. Phillips' study group on review of Nigeria tax system 2002, 2003, and because peculiarities of Nigerian environment, where you now find, they said, like King Louis XIV of France that says, c'est moi le moi. I am the state. The state is me. You have companies, they're only companies in name, but they are private, like sole proprietorship entities. You cannot separate the company, so-called, from the owner of the company. And therefore, to that extent, can you really say, even though they may be operating across boundaries of states, can you really say that they are companies in the true sense of the word?
That's
so that recommendation made that why don't you allow those private companies of a particular threshold to be under jurisdiction of the states? Because some people will now play hide and seek. They claim that they run away from the states and claim it is the company. And then when they come to federal, they go and run that they are individuals. And then the issue is that you see in the company's account, you see a lot of director's current account. What is the paid up capital? 2 naira. But the company is trading in millions, hundreds of millions, even billions. But the paid up capital is only 2 naira. And then where is all the money going? There is no distinction between the person and the company. So that's an issue for another day.
Okay. What are petroleum profit tax?
Of course, petroleum profit tax says companies that are what they call, that win and obtain crude oil and hydrocarbon and natural gas within the territorial boundaries of Nigeria. And once you define territorial boundaries of Nigeria, not just the landmass, but also continental shelf, up to 200 kilometers. That is what defined as territorial boundaries of Nigeria. So if you're a company operating within, then you're liable, whether a Nigerian registered company or otherwise. Of course, these days it must be a Nigerian company for them to be given a license.
What is the rate of petroleum profit tax?
65.75%.
65.75.
Yes.
Yeah.
The first 5 years when you spot crude oil is when you're on 65.75.
Yeah.
The one that's, there's no tax exemption when you spotting crude oil is when you strike oil and start, bringing out crude oil from the bowels. You're on 65.75%. And the essence of that first 5 years period to allow you to recover your pre-production, costs.
Yes.
And from the 6th year, you migrate to 85%.
Okay, 85%.
Yeah. But those that are on what they call production sharing contract, down 50%.
Okay.
All true.
We hear about joint venture, production sharing contract, like you said. We hear about MOU. Are those different jurisdictions with different rates?
When you talk about joint venture is a partnership. We talk about oil business. Yes, you can have partnership, what is called joint venture. And it's an issue defined of high capital nature, intensive nature of crude oil business. You may not have the financial muscle, to prosecute that business all alone. And so there's a tendency for you to invite partners. Partners may be those who have the financial muscle. It may be those who have the technical muscle, expertise that can bring into the business. Or it may be a combination of both. And so joint venture has been used technically between government and international oil companies. The MOU was an issue of, there was a time things got so bad for Nigeria in the mid-80s, but precisely around 1985, when there was a lot of law in the exploration activities. The quantum of our reserves, crude oil reserves, defines the production level. What is the quantity of crude you can produce, on a daily basis. The less your reserves are, then the lower your ability to produce. And so, and for you to enhance your reserve level, you must go into exploration activity. And it costs much because exploration activity involves what they call them now wild goose chase. That's the expression. It is like a wild goose chase, which come to nothing. So the oil companies were no more keen. Because again the crude oil price fell as low as $9 per barrel, and if you cannot even export and sell the one you have produced, what's the incentive to go into exploration? Because where will the money come from? It is when you are producing and selling and fetching good money. Yes. It is from your profit that you can plow into exploration activity to enhance your reserve level. And so when that came to that terrible state, Nigeria had to do something to show up. Now that even what you have produced is all lying there, nobody is asking you how much. So Nigeria had to come down. How do you incentivize the oil companies? One, so that they were able to lift and sell even our crude oil. Two, that they can even invest in exploration activities and increase our reserve level. Our reserves went as low as 15 billion barrels a day, and that will define our production level. So that's the MOU. So government now entered into at the moment of understanding. That's the first one of 1986. Yeah, 1986 to 1991. They went into it and granted the oil companies some incentives, some rebates, package of incentives and rebates to enable them to lift our crude oil and sell, and then we'll get some money giving us all rebates, and then also to go into exploration. And then by 1991, then our government also went further to bring what they call reserve addition bonus. That one is also to incentivize production activity. Reserve addition bonus, if you're able to increase our reserve, then there is a formula they will apply to give you a bonus, because it's called reserve addition bonus, which will reduce your tax liability. So that ran until 1999. By 2000, there was another MOU. So that's what an MOU is. Then the other element of the MOU was it now moderated the PPTA provision. Under the MOU, it moderates the PPTA provision. Like what they call tax reference price, as seen from realizable price that you have, under the normal stream, and then you pay tax. You now talk about in a MOU, there is a different formula for calculating, the PPT. Then you compare logically the edition under MOU, liability under MOU, will usually be lower, as long as the price is below $30 crude oil price. So that was what the MOU sought to do, giving an alternative, fiscal arrangement. That's what the MOU is.
Welcome back. The program is still Tax Matters, and we are looking at taxes in Nigeria. I'm still talking about direct taxes. We know there is one that you call capital gains tax. What is the underpinning for this law, for this tax?
Obviously, from the name of the tax,
Capital gains
tax is simply a tax on gains made from disposal of capital items. We're talking in terms of assets generally, property. We're talking about assets, fixed assets like land, building, motor vehicles, plant equipment, and the like, ship, aircraft, furniture items. You already said.
Why are you assuming that when we sell them, we must make a profit?
Nobody said you must make a profit. Remember, I said capital gains tax, which, as stated, is where you make gains that you pay the tax. If you don't make gain, if you now what they call it now, capital loss, you can't talk about the capital loss tax. Otherwise, they were talking about capital tax. If they are not emphasizing the gain, they will say capital tax. In which case, they don't want to know as to whether you made a gain. In that case, we redefine the nature of the tax. It will not be merely when you dispose of this.
We do know that all things being equal, land will appreciate, buildings may appreciate. Even if the buildings don't appreciate, at least the land on which they stand will appreciate. So it's in order, as opposed to like furniture and cars and all that.
Now what be this? Make it sound where you. The thing where you side me too much, calculation is where OJ.
Madam, me correct now. Now the price be that.
You are playing with fire, so me I know say they never search fast for picking things. Oh, you want to play me while you? You want to teach me abi?
Madam, now everything with the add back on top. Now so with the seller.
Madam, you dey correct o.
Good day, madam. Any problem? Problem there.
The thing be say una not supposed to charge VAT for baby items and other things wey dey for VAT exemption list.
Sam.
Chai! This one na wayo receipt o. Correct receipt suppose contain the things wey you buy and the VAT wey dey on top. Then other items wey not get VAT, you go put them separately.
Madam, I apologize, You go change that.
Change that. You see say we know wetin government.
To pay VAT dey compulsory. Now government they use to make our life jolly, to collect and pay sharply to government. It is correct.
FIRS, it pays to pay your tax.
Let's go to indirect taxes. And here you spoke about VAT, value-added tax, custom duty, import duty. What is the law governing VAT in Nigeria? What is the rate of VAT?
Of course, the law governing VAT, a 1993 law, is called Value-added Tax Act. Cap, V, 7 or so, Laws of Federal Nigeria, 2004. Of course, that law was enacted then as a decree in 1993 during the time of General Ibrahim Babangida as president. And the law, the rate has remained static at 5%. 21 years, this is going to be the 21st year since that law was enacted. Compared to our neighbors, that the rates are ranging from as much as not even 10%, they're talking about 15-17%. But we're still stuck with 5%. So it's a tax, on consumption.
You spoke about custom duty, import duty. Are they different? There used to be a time where we had excise duty.
Yeah, whether you call it custom or import, they are more or less the same. It is a duty or tax imposed on imports. Okay. Same from export, export duty. But for some countries, you don't have much of export duty. The reason is that you want to make your exports competitive. So you try as much as possible to win your exports from any complexities, by way of imposing, tax that will increase the cost and therefore make uncompetitive, internationally. All right. We talk about excise. Excise is on locally produced goods, imposed on local produce, specified locally produced goods like alcohol, beer, and the like, which are produced locally. That have been, restricted. There are some items, those items that, if you like, government wants to, discourage.
Okay.
I'm not sure they have abolished this on alcohol, beer, and the rest of them. Of course, there's not abolished on cigarettes produced locally and so on. But the items that are still under excise, these are very few now.
Do we have inheritance tax in Nigeria? Have we ever had inheritance tax?
It's one tax that we had what they call capital transfer tax, but its lifespan was very, very short. It remained in the books for years, and nobody was unimplemented. So during the 1991 study group, of the Matters S14E15 study group, the recommendation was made to the government that particular act was more or less unnatural. It was not attuned to our own local conditions. And so in 1993, that act was repealed. That's capital transfer. That was what comes close to what we can call an inheritance tax in Nigeria.
But when people apply for letter of administration, when they apply for, to be able to take over what belongs to their dead parents, the courts charge certain fees and levies.
The question you now ask yourself is, are courts tax authorities?
Okay. And
if the courts are not tax authorities, then you can't call those.
But the money goes to government.
No. Well, before you can say tax, then there's a defined body. Actually, just like just like you go into court to go and do an affidavit, and you have to pay money.
That's not a tax.
Of course not.
But then if we list out...
Or you go to court to go and perfect your land document. You got, stamping and all that.
But the money goes to government. We are going back to where we started this discussion.
That's the point I'm not, I think we have already gone beyond where I said that the tendency for people to see, like I said, money is money. Yes. It doesn't matter how you try to define it. That as long as that is going to government.
But Mr. Dike, are you saying that if I buy a piece of land for 2 million naira and they calculate all that I have to pay to the government and it amounts to about 280 or 480, that I should not consider it as tax at all? It's not. But the money is going to government.
That's more in a kind of user, charge.
Okay. That is what.
Because that tax is not being imposed generally. It's not being, so that charge.
I get your point. Also, my father dies, we list the houses, 4 houses, we list the shares, and we go to the court, and to get letter of administration or whatever, the pay so amount, you say it is not a tax because the court is not a taxing authority.
Whatever they are collecting is administrative, that the costs have imposed, or when they raise, if you like, independent revenue. The issue now is that part of what's been done now is to try and streamline such user charges, because it's creating some fiscal indiscipline, such that especially if all agencies are going to the common pool to draw from resources from there, and then you now try and allocate those common resources harvested from taxation in accordance with the mandates of the various agencies, and then they now collect that one and still go behind, and then go and start imposing some charges or levies, and then at the end of the day they are more or less that's double counting. They are cheating on the system, and that government is saying that agencies must account for. Remember that what now Assembly tried to push, account for such money, and then so they're able to now define what allocations can be given to them. Good. If you are drawing from the common pool, they must take account of independent revenue. Yes. In a budget allocation being made to you. Yes. You cannot get the normal budget allocation that assumes you don't have independent source, and then still go back and generating extra revenue.
When we started in the last episode, to the ordinary man, he has started with money. But we do get your point. We agree with you that when those things are not generally imposed, they are not for everybody. We cannot call them taxes. We have tenement rates. In places like Cross River and Lagos State, they even have what they call land use charge, whereby the local governments have, according to the state governments, have handed over their powers to collect tenement rate under the Constitution to the state government. So we have tenement rate, we have land use charge. By whatever name they are called, do they, in your opinion, amount to property tax? That is to say, like we asked you about inheritance tax, do we have property tax in Nigeria?
The reason why it cannot, because if you talk about property tax, if you go to proper, definition of property tax, that should be admissible expenses. Okay. Let me take on like capital gains. Okay. And disposal of property. Capital gains you may on disposal of ties for that. You can get a value, not to get enhanced value for sale, and later this things that you do to enhance, from the capital gain before we can now apply.
Charge the 10%.
Yeah, 10%. Okay, but when you now say that the land use charge. Remember the word said land use charge. You talk about tenement rate. These are, you can say they are quasi, but they are not property tax in the true sense of the word.
So why are we running away from property tax?
You pay tax, is it on disposal of property or on what? For the former, remember, you have a property, fine. That's one. You have a owner-occupied property. Then you have a commercial property.
Yes.
And then that commercial property, you rent it out, yes. You earn income. Yes. The income is taxable under yes. income tax.
Yes.
Then the property is there. He said, okay, you go and pay tax. We don't have that. So more or less what you have is tenement rate, which is a quasi, but not.
But they have property taxes abroad.
Even some of our neighbors, they are very vibrant.
How does it operate?
It's technically speaking, really, you find out that it is not paying tax because when you're old, it is when the property is changing hand.
Okay, it's not really.
It is only changing hand because as you see there, people are disposing of property. Some people are also acquiring new ones, and because you have to go to register, they have change of ownership. That's how the revenue authorities will also track you.
It's almost like capital gains tax.
It's subsumed under capital gains tax. Property disposals have been taxed.
Yes. We thank you most sincerely for coming on to the program. You have indeed enlarged our coast and we know that our viewers are grateful to you. And so we want to thank you for heeding our call. We hope that when we knock on your doors again, as you always do, you will oblige us, because like we said earlier, you are regarded as prof. Thank you for coming on to the program, sir.